Good evening, everyone. Today is indeed a very special day for all of us as we are about to commence the Industry Academia Knowledge Sharing Collaboration, Rejuvenation in Corporate Reporting for the next decade. An event that consists of industry experts talk on modern slavery reporting and sustainability reporting together with an exploration of accounting interns' industry experience. So, with great pleasure, we welcome you to the Rejuvenation in Corporate Reporting for the next decade, the first ever academic forum organized by a national university of Sri Lanka, for which CPD accredited by CA, ACCA, CIMA, CFA, CMA and AAT Sri Lanka.
Department of Accountancy, Faculty of Commerce and Management Studies, University of Kelaniya. Fostering knowledge exchange on corporate reporting. Launching of case studies in Accounting Journal. Keynote speeches on modern slavery reporting, sustainability reporting, global developments. DD first ever CPD accredited academic program by CA, ACCA, CIMA, CFA, CMA and AAT Sri Lanka.
The Department of Accountancy, DOA, is one of the leading departments in the Faculty of Commerce and Management Studies, University of Kelaniya. By bridging the gap between academia and industry, DOA empowers these students with the skills and knowledge they need to thrive in dynamic world of accounting. Without further ado, let us collectively embark on this voyage of discovery where the boundaries of possibilities are expanded and new horizons beckon. It's with great pleasure we present the culmination of passion, dedication, and unwavering pursuit of excellence of the Department of Accountancy, University of Kelaniya at this remarkable occasion.
The ancient city of Kelaniya has been the home of the University of Kelaniya for over 140 years. As a major national university within Sri Lanka, the University of Kelaniya is committed to provide high-quality education and to conduct high-impact research, which contributes significantly to the enhancement of existing knowledge in a multitude of fields. The Department of Accountancy, the most prominent department of the Faculty of Commerce and Management Studies, was established in 1999. The department consists of high-caliber academic staff with industry exposure. The DOA is equipped with a resource center, conference rooms, lecture theaters, and a computer lab. The departmental library houses a collection of textbooks, research publications, periodicals, etc. The curriculum of the DOA is accredited by the Association of Chartered Certified Accountants. The university awards gold medals for outstanding students of the DOA. An internship is a pre-graduation professional learning experience that offers practical work exposure within the corporate world, which allows students to apply theory learnt in the classroom in a professional environment. The Department of Accountancy is the pioneer of introducing internship programs into the undergraduate curriculum of the University of Kelaniya in the year 1999, under the leadership of Professor J.M.D. Abeywardhana of the department. DOA is one of the leading departments in the university system which adopts technology in higher education for teaching, learning, and assessment. The Department of Accountancy implements a systematic monitoring and evaluation mechanism to enrich the existing program, which makes it on par with international education standards. DOA has succeeded in producing technology-savvy accounting graduates to match the 21st century graduate profile. DOA strives to achieve the highest level of academic achievement by introducing a creative teaching and learning process. We, the Department of Accountancy, always make the effort to be the best among the best.
With that, ladies and gentlemen, we kindly request everyone to salute our alma mater as we honor our esteemed university through the rendition of the University Anthem. In a demonstration of our unity and pride, let us lend our voices to this cherished symbol of our academic community.
Desakitu gosa urumaya suratina siat suwanda vidu kirana bedadena sarasandaki vidu lakare udadira Kelaniya sarasavi mata Kelaniya sarasavi mata Siluminani isuru sadalana Jai Jeeva Ulpadavanno Sindana Kelaniya Sarasavi Mata Kelaniya Sarasavi Mata Siya desakitu gosa urumaya suratina Siya suwanda vidu kirana bedadena Sarasandaki vidulakare udadira Kelaniya sarasavi mata Kelaniya sarasavi mata Vividurunana guna Yugayan yugayat Hayata tilinatara Karu pirivara sahamululova sarasana Kelaniya sarasavi mata Vidu ambare babaleva Siya දෙස කිතු ගොස උරුමය සුරකින සියත් සුවඳ විදු කිරණ බෙදාගෙන සරාසඳකි විදුලතර උදාගිර කැලණිය සරසවි මාතා විදු අඹරේ බැබලේවා.
Leadership, in its essence, is a guiding light that illuminates our path, offering direction, inspiration, and unwavering support. We are fortunate to have extraordinary leaders who have dedicated themselves to the advancement of knowledge, the empowerment of students, and the pursuit of excellence. Let me cordially invite Professor Dilrukshi Yapa Abeywardhana, Head, Department of Accountancy, Professor Bandara Vanninayaka, Dean, Faculty of Commerce and Management Studies, University of Kelaniya, and also Senior Professor Nilanthi De Silva, Vice Chancellor, University of Kelaniya, to deliver the words of welcome.
The Department of Accountancy is one of the most prolific departments of the Faculty of Commerce and Management Studies, which never fails to unleash what is best for its undergraduates, offering best-in-class diagonal degree programs coupled with know-how, knowledge, and practical exposure, make its undergraduates to be corporate-ready by end of their degree program. Corporate-ready undergraduates are the ones who know what it is and very much capable enough in bringing out their utmost to the industry when it matters the most. Covering a wide spectrum of theoretical aspects along with knowledge and wisdom, the department does ensure that it keeps a step ahead in its deliverables, making the undergraduates to go through a period of internship, which ensures the fact that what was taught will be put into practice, and the undergraduates who are outcome of the Department of Accountancy to the economy of the country are tamed, polished, and shined in, making them go to that extra mile. With that note, as the head of the department, let me warmly welcome you all to one of the most highlighted event of our current calendar year, Rejuvenation in Corporate Reporting for the next decade. I'm proud to say that for the first time ever in Sri Lanka, we were able to obtain CPD hours from 5 professional institutions in Sri Lanka: CA, ACCA, CIMA, CFA, and CMA. Being the trendsetter in the Faculty of Commerce and Management Studies, University of Kelaniya, we are proud to present Rejuvenation in Corporate Reporting for the next decade, which consists of industry experts' talk on modern slavery reporting and sustainability reporting for the next decade, together with an exploration of accounting interns' industry experience. It was proven in number of occasions and circumstances that the Department of Accountancy is one of the pioneer in delivering the best in class and thriving to be on the top, unleashing another fresh and innovative event this year, Rejuvenation in Corporate Reporting for the next decade, welcoming the industry specialists and opening up a discussion forum on few of the most highlighted and concerning areas as a globe, which does add value to our audience. Therefore, by means of which the keynote speakers of today's evening will be addressing on 2 of the highly discussed topics at present, whereas our first keynote speaker, Dr. Catherine Christ, will be addressing the gathering on slavery accounting that we hear upon globally these days, and Mr. Sharath Martin will be addressing on sustainability reporting for the next decade, as how and why the corporate around the globe could increasingly embrace sustainability reporting. Having mentioned in the keynote speeches, this event today is a vital knowledge sharing platform offered by the Department of Accountancy in collaboration with the industry partners who specialized in respective sectors in which they are into, and which is indeed the outcome of the internship in accounting of fourth year undergraduate of the department. Before winding up, unveiling another milestone by the department. With that note, as the head of the department, let me warmly welcome you all to the one of the most highlighted event of our calendar year, Rejuvenation in Corporate Reporting for the next decade.
It is a pleasure to witness the internship ceremony organized by Department of Accountancy under the theme Rejuvenation in Corporate Reporting for Next Decades. I am sure that there will be many insightful discussion with the expert from the industry on emerging areas of accounting and business reporting. I have no doubt that it will help to our students immensely for their career progression, as well as I believe this is a win-win situation to the industry as well, because today we are going to launch a case study on accounting based on the knowledge and experience gained by our internship students in the different industries. I am proud to say Faculty of Commerce and Management Studies of one of leading business faculties in the country, and we have taken a lot of actions and initiations and innovative ideas in the higher education sector in Sri Lanka. And currently we are offering several bachelor degree programs as well as several postgraduate degree programs from the faculty. Our curriculum are designed to meet SLQF requirement. Our commitment to quality in program design, teaching, learning and assessment are recognized by Quality Assurance Council of UGC with A grades for all the degree programs. We are not only focused on knowledge creation, but also development of the skills and attitudes given top priority in our study program. Knowledge, skill, attitude, mindset are identified uniquely for each graduate profile of each program in our faculty. And some competencies of graduate profile are developed through 1 year compulsory internship program. During the internship period, students get opportunity to apply their theoretical and subject knowledge in the different practical scenarios and get the corporate exposure to become corporate ready graduate in the country. Today it is great privilege to have two prominent personalities to share their knowledge on emerging area of accounting and business reporting. Dr. Catherine from University of South Australia will discuss on modern slavery reporting, and Mrs. Sarath Martin from ACCA will talk about sustainability reporting for next decade. Both sessions will be very fruitful sessions and they will provide many insights into the respective field. As the Dean of Faculty, whilst thanking the dynamic team of Department of Accountancy for organizing very important event like this for our students, I would like to extend my sincere wishes too for a fruitful event today. Thank you.
Good evening, ladies and gentlemen. It is my pleasure as the Vice Chancellor of the University of Kelaniya to share this short message of felicitation with you today. I note that this event, which marks the end of the internship program for students of the BBMGT Honours in Accountancy degree program, also marks the launch of the latest issue of Case Studies in Accounting. I learned at last year's event that these case studies document the experiences of our final year accounting undergraduates in the spheres of accounting, auditing, and finance, and creates a valuable platform for sharing knowledge and experience across industry and academia. This year's event, however, brings in a third really significant new innovation with the introduction of keynote addresses that have been accepted by several professional bodies such as CA, ACA, CIMA, CFA, and CMA as being suitable credit hours for the continuing professional development of their membership. I was informed by the academic staff involved in organizing this event that the theme is Rejuvenation in Corporate Reporting for the next decade, and that the two keynote addresses to be delivered under this theme this evening are on modern slavery reporting and sustainability reporting for the next decade. Both these topics are globally important issues, and I have no doubt that the keynote speakers will do justice to them, considering that their audience tonight consists of not just students and staff, but also large numbers of professionals from the industry. It is our way of thanking all those from industry who support our students during their internships and enable them to enter the world of work as competent professionals. I congratulate the head of the Department of Accountancy, Professor Dilrukshi, Yapa, Abeywardhana, and her team, particularly the coordinator of the accountancy internship program, and all the students for their hard work and tireless efforts that have made this event possible. The Department of Accountancy in our Faculty of Commerce and Management Studies has always been a trendsetter, not just in terms of effective delivery of programs of study with well-designed curricula, but also in coming up with innovative ideas and events like today's. I wish you all the very best and hope that this evening will be very fruitful for all those who participate in today's event. Thank you.
Thank you, Madam and Sir, for the warm word of welcome. We firmly believe that your presence and words would greatly enrich the event and inspire our audience. As one of the innovations of Department of Accountancy, University of Kelaniya, in its remarkable history of contributing new ideas to the accounting arena, we are proud to present the Case Studies in Accounting Journal under the theme of Bridging the Gap. The journal is a collection of practical and contemporary accounting issues identified during the internship training period of the final year undergraduates. Case Studies in Accounting Journal was initiated in the year 2014 with the broad aim of providing a platform for the final year undergraduates to showcase their ability to apply theoretical knowledge into the practice. This enables the students to publish the learning experiences they gathered during their compulsory internship period in different audit as well as non-audit sector organizations as case studies. Case Studies in Accounting Journal has been published for 9th consecutive years, and today you are about to witness the launch of the 10th volume. And gentlemen, you can now access the e-version of the Case Studies in Accounting Journal using the QR code shared in the Zoom chat box. Ladies and gentlemen, today we have the privilege of delving into a realm of knowledge and practical experience that our students have embarked upon during their training period. In recognition of their exceptional achievements, a few of our outstanding students are ready to share their valuable insights on few of the case studies published in the Accounting Journal. Without further ado, let us welcome these exceptional final year undergraduates of TOA as they share their case studies, offering us a window into their remarkable experiences and reaffirming the importance of practical learning.
The economy has been really worse these days, right?
Hi guys.
Oh, hi Subun.
What are you discussing?
We were actually talking about the current economic situation of the country.
Did you heard IMF has imposed some condition to restructure the both foreign and domestic debt?
Yes, Subun. I also heard about that news. It will directly impact the banking and finance sector. If you can remember, we faced a similar situation during the COVID period, and I think this will be a challenge for them.
That's right, Imashi. Do you have any idea how this will impact the banking and finance sector? It will be unfavorable for them, right?
Imashi, let me add something first.
Yeah, sure, Subun.
Yes, you are correct. During the COVID period also, banks and the financial institution had to make impairment provision that they had never seen before. So with that, they also face difficulties when provisioning the impairment for restructuring and reschedule facilities. I think this situation also will be a significant challenge for them.
Supun, you surely have some practical experience because you've been involved in some banking audits, right?
Yeah, definitely, Asas. I have faced that kind of issues when I was engaged to the banking audit. So if I extracted one of the issue, let's assume the bank was MFC Bank facing. So they granted some loan to customers who operate in the construction industry. From that, some of the customers has identified as a non-performing customers in 2019 because they had defaulted to make the repayment within 90 days past due. Anyway, in 2022, from that, some of the customers have settled their overdues and rescheduled the loan and continued their repayment within 30 days past due.
Subun, I think you are going to mention stage categorization, right?
Yeah, Imashi.
In stage categorization, customers should categorize into 3 stages based on their DPD. Customers with less than 30 days are under stage 1, which means performing customers. And customers with 30 to 90 days are under stage 2, which means underperforming customers. And customers with more than 90 days are under stage 3, which means non-performing customers.
Imashi, are they only considering DPD?
Yes, that's the point where I want to come. The bank also done the same thing. Due to customer make the repayment within 30 days past due, the bank what they did was they upgrade those credit facilities from stage 3 to stage 1 only considering the days past due.
So Supun, what are the other factors that we need to consider?
Yeah, yes, SLFRS 9 introduced the expected credit loss model. From that, evaluate the credit risks associated with the credit facilities, which means we should assess whether the credit risk has been increased or not significantly since the initial recognition. In this case, those customers were already defaulted customers, which means the credit risk has been increased significantly since the initial recognition. And the Banking Act clearly states if licensed bank may upgrade credit facilities from higher stage to a lower stage, the bank should properly document the rationale for such upgrading. Minimum shall ensure the sustainability of the customers.
So what will be the impact on the financial statements?
Yeah, as a result of those customers identified in stage 1, they have identified the 12-month expected credit loss. As a result, the overall expected credit loss has been underestimated and the relevant year financial profit has been now overestimated by huge amount.
So small thing, Subun. How do you rectify this issue?
Yeah, Imashi, those customers should identify in stage 3 until bank properly document the rationale for such upgrading. Therefore, they should identify the lifetime expected credit loss when adopted the SLFRS 9. And also, the bank should make the additional impairment provision by adjusting the financial state.
Imashi, I heard that you got another interesting case which is related to individual impairment.
Yes. Let's assume a bank called A&A. And as we all know, a bank's primary business activity is to generate interest income from granting loans and lease facilities to their customers. So according to SLFRS 9 standard, bank has to identify impairment provision for those loans and advances.
Okay, Imashi. As I know, in individual impairment, the practice is to identify the customers individually and provide the required provision for them. Would you like to explain it?
Yes. In this scenario, bank's practice is to segregate their loan portfolio into 2 parts by considering a contract threshold. And loans exceeding the threshold are considered for the individual impairment. After identifying customers for individual impairment, they are forecasting the recovery cash flows and providing the required impairment provision for customers. For the cash flow forecasting purpose, branch managers and the recovery officers are engaged. Those cash flows are highly judgmental and based on their view. As I know, Supun, you have enough experience regarding this area also. So do you know how they are forecast the cash flows, or are there any bases that they are used to forecast the cash flows?
Yes, of course, Imashi. To forecast the cash flows, branch manager and the recovery officer use the analysis using the objective evidence analysis for each and every customer. By evaluating the customers using those objective evidence analysis, they forecast the cash flows and provide the impairment by taking the difference between the loan outstanding and the present value of the forecasted cash flows.
Okay, so can one of you mention a few of them for us?
Yeah, sure, I will mention. A 50% or more fall in the turnover or the profit before tax when compared to 2 previous consecutive years, and also adverse gearing ratio. And another one is delaying the commencement of business operations or a project as of the agreed date.
That's interesting, guys. But I feel like that there can be some issues in forecasting the cash flows, right?
Yes, you are right, Jesus. According to the analysis done by us for each and every customer selected for individual impairment, we found some errors in cash flow forecasting. So they had to increase the impairment provision by revisiting the cash flows.
So Imashi, what are the bases that you use to evaluate the customers other than the objective evidence analysis?
Yes, Supun. We referred the objective evidence analysis provided by the bank, and also additionally we perform backtesting for each and every customer selected for individual impairment by considering factors like their past payment practices and the industry which they operate, and also considering the profitability of the company. By analyzing all these factors, we found the provision provided by the bank is not sufficient for those customers.
So Imashi, what are the implications of this issue?
Imashi, let me add something first.
Yeah, sure.
Yes. If the present value of the forecasted cash flows are less than the loan outstanding, those differences are taken as a significant impairment, which means significant impairment is highly dependent on the forecasted cash flows. So if the forecasted cash flows are inaccurate, the bottom line of the profit may be underestimated or overestimated. So there is a chance to change the company's profit by using the inaccurate cash flows, right? Right.
Subun, just to add to your comment, individual impairment is highly relies on the forecasted cash flows. So inaccurate cash flows can overstate or understate the profitability of the company. In this scenario, the provision provided by the bank is not sufficient. That means the provision is underprovided. Therefore, the bank's profit has been overestimated. Therefore, bank has to revisit the cash flows, and accordingly they had to increase the impairment in the balance sheet. And also additionally, they had to increase the impairment loss in the P&L. These things can be happen due to the lack of importance given by the branch managers and the recovery officers, and also absence of proper independent review process, and also lack of experience in cash flow forecasting.
Yes, the other day I heard you mention about the customer loyalty program. So what's about that?
Yes, Supun. I have an interesting case about a customer loyalty program. Let's call this organization who is associated with this program XQC. So recently, this XQC has faced some competition in the market, and to tackle this issue, they have introduced a customer loyalty program. In this program, for every 100 rupees spent by the customer, they get 1 point, which they can redeem after 1 month as stock redeem.
That sounds interesting. Is it successful? Program progress?
It has been really successful actually.
Wow, that's great. But I sense there is an issue with this program. Can you please explain it to us?
Yes, you're right, Himanshu. So in XQC, one of the accounts assistants was responsible to record all the sales revenue from showrooms, and during a finance review in October 2022, it was discovered that the accounts assistant has not recognized the selling of the goods to the customer and the material right as two separate performance obligations, and has recorded this transaction by crediting the total sales value to the revenue account and writing off the total value of the loyalty points, which is expected to be redeemed as a cash discount. This does not comply with the 5-step model given by SLFRS 15.
So Yasas, what does this mean for the organization of financial statement?
Yes, Sukun. This actually represents several key accounting issues. First, the revenue recognition of the organization is improper. So the revenue of the organization is overstated. And since the material right portion has been written off as a cash discount, the expenses of the organization is overstated and the assets of the organization is understated. And finally, since the contract liability portion has not been properly recognized, the liability of the organization is understated. With all of these issues, the XQC's financial statements won't represent a true and fair view.
So what steps can XQC take to rectify this issue?
Yasas, I think the first step is to revise the previous entries done by the account executive, right?
Yes, Supun. So what is the next step in your opinion?
Yeah, I think after revising the previous entries done by the account executive, the organization should recognize the selling of the good and the material right as a two separate performance obligation, and should calculate the allocated transaction price for each. So with that, the first performance obligation of the selling of the good should be recognized as a revenue of the company, and the material right portion should be recognized as a liability until it's claimed by the customers, right?
Yeah.
That sounds like a good plan in correctly fixing this issue. By the way, I've been doing some researches regarding SLFRS 15, and I found that some new trends are emerging, like companies are moving towards recognizing liability for unredeemed loyalty points rather than waiting for customers to redeem them.
That sounds interesting. So, do you think companies should adapt to this approach?
It depends on the specifics of XQC's loyalty program and their financial situation. But it's worth considering, especially if XQC want to align with latest international accounting standards.
Wow, that's really fascinating, Himashi.
Wow, we learned a lot today. Huh? So, see you guys.
See you guys.
See you guys. Let's catch up later.
Thank you all. We believe that these case study presentations enabled the audience to refresh their knowledge on the application of accounting standards in different scenarios. Ladies and gentlemen, we are now privileged to delve into a critical and thought-provoking topic that calls for our attention and awareness. In our pursuit of knowledge and progress, it's crucial that we remain mindful of the ethical dimensions of business practices and their impact on society. Today, we have the distinct honor of welcoming a distinguished keynote speaker, Dr. Catherine Christ, Senior Lecturer in Accounting, University of South Australia. She is an expert in accounting for modern slavery risk in business operations and supply chains, and recently founded the South Australian Modern Slavery Research and Practitioner Network. Catherine has received funding from CPA Australia and AFANS for her research into modern slavery and was a nominee for the 2021 Themis Financial Crime Prevention Award in the category of Combating Modern Slavery. She has published widely on the topic of modern slavery and sustainability accounting more generally, and regularly contributes to mainstream media on her areas of interest. Ladies and gentlemen, let us extend a warm welcome to Dr. Catherine Christ to enlighten us on the emerging topic of modern slavery reporting. May her words ignite a spark within us, motivating us to be agents of positive change in our respective spheres of influence.
Okay, thank you so much for those words of welcome. It's an absolute pleasure to be here with you today to talk about a topic that is very close to my heart, which is modern slavery. So I'm just going to share my screen now. Okay, hopefully you can all see that.
Yes, Dr. Catherine, it's visible.
Lovely, thank you for confirming that. So today I'm going to be talking with you about modern slavery and the implications for business and society, and in particular, the implications for reporting when it comes to modern slavery and some of the developments we're seeing across the globe. So the first thing I really need to cover before I get into modern slavery reporting is, what am I talking about when I talk about modern slavery? I'm sure you all recognise that fair and decent work is the objective in most countries, including Australia, where I'm from, and obviously Sri Lanka, where most of you are joining from. Yet what we see, unfortunately, is that exploitation continues. And the most extreme form of work-related exploitation has come to be known as modern slavery. Now, when we think about slavery, many people think of the transatlantic slave trade and traditional forms of slavery, where one person was purchased and actually paid for by another person, and they were then owned by that individual. Modern slavery is a little bit different. And instead of ownership, we now focus on this notion of control. So modern slavery is based on one party controlling another and forcing them to work or engage in activities against their will for the purpose of exploitation and economic benefit. So although that last section hasn't changed, we are now focusing more on control as opposed to ownership. Now, when we think about modern slavery exists on a continuum of working conditions. So at the far end, you can see legal and appropriate work. This is what we all want to see, where all relevant laws and regulations are complied with. And at the extreme end, we have modern slavery. Now, it's worth noting that poor work conditions are in this grey area in the middle. Poor working conditions, while they may be illegal, unethical and abhorrent, do not necessarily constitute modern slavery. Modern slavery is a condition where people cannot leave the exploitation. Essentially, they are trapped in the exploitation and they have no other options. So we need to remain cognizant of poor working conditions, but if we were to include them in the overall figures of modern slavery, the numbers would increase exponentially. So modern slavery is illegal and it is illegitimate, and it includes traditional slavery, forced or compulsory labour, bonded labour, the worst forms of child labour, sexual servitude, domestic servitude, organ trafficking, orphan trafficking, and human trafficking. Now, from a business perspective, we're most concerned with forced compulsory labour, bonded labour, child labour, and human trafficking, and of course, modern slavery as an umbrella term. Now, before today's event, you would have received a very short survey questionnaire with 3 questions. And we asked you whether you had actually heard of the following terms. We had 74 responses, and we discovered that, yes, most people have heard of forced labour, the worst forms of child labour, human trafficking. Bonded labour or debt bondage and modern slavery are not as well known. And this is quite interesting. And then when we went on further and we asked the 74 respondents to rate their knowledge of these, we can see that most people consider their knowledge to either be average, to below average, to very poor. Very few would rate their knowledge as above average or excellent, which is why it is so important that as accountants and as business professionals, that we begin to educate ourselves to a greater extent when it comes to these areas. So I find it really interesting, before talking about reporting for modern slavery to do a little bit of a historical comparison. Now, as I said, most people think about slavery in the sense of the transatlantic slave trade. This is where the Black Africans were sent to the Americas across the Atlantic. This occurred over a period of 300 years, and 12.5 million men, women, and children were shipped from Africa over this time, with only 10.7 million making their destination. Now, this is where it gets interesting. The price per slave at this time in today's dollars was worth about 25 to 40,000 US dollars per person. So now let's compare this to today. Modern slavery, there are 50 million victims worldwide at the moment. 50 million people in slavery conditions who cannot leave. There are more slaves today than at any other time in human history, and the price per slave is as little as $100 each if we were to apply traditional ownership principles. So this is a real problem. So a question I often like to ask is, would you buy a human being? This sounds like a ridiculous question, or would you support your business or a business you're advising buying a human being? I'm sure many of you would say no. But let me ask you this question. Do you own one of these? I do. One of these? I'm on one at the moment. What about these? Clothes. If you do, then you are actually inadvertently supporting slavery. And the reason this is the case is that slavery affects every country and is thought to exist in every industry. So just how big is this problem? There are currently, as I said, more than 50 million people enslaved worldwide, and over 26 million are currently in forced labor, many of those in corporate supply chains. So the goods that we purchase and use every day may have been made with forced labor. 71% of victims are female, and the Asia Pacific region is the area with the largest number of enslaved people. So this is relevant to Australia and also Sri Lanka. The latest estimates from the Walk Free Foundation are that 468 billion US dollars of goods at risk of modern slavery are currently imported into G20 countries alone. That is huge. And as I said, slavery is believed to exist in every country, and the problem is considered endemic. It is basically a problem that has gone from being very much in the open with traditional slavery to being hidden in plain sight, and it is embedded within many of the products we use every day. So relevant high-risk industries, it's basically anywhere where labour-intensive activities exist, but where the value added is quite low. Seasonal work is a big problem. So we're talking agriculture, hospitality, textile and garment sectors. Some of these are very prominent, I know, in Sri Lanka, and certainly agriculture and hospitality is very prominent in Australia. Now, before I get on to reporting, I do want to highlight something here. Often people say, well, isn't this something that just happens in developing countries? And no, it doesn't. It also happens in Australia. The latest estimates are that there are currently more than 40,000 people currently enslaved in Australia. And so I've just got a few headlines for you to show you what that can look like. So seasonal work, Pacific Island workers treated like slaves. Seasonal worker scheme likened to indentured labour. Pacific Island farm workers demand justice. Migration relates to exploited workers. Some international students at risk of modern slavery. Wage theft has become culturally accepted. Slave labour and sexual exploitation relating to backpackers. So these are just some headlines, and it shows these are from Australian publications. It exists everywhere. So it exists in Australia, and it also exists in Sri Lanka. So obviously, if you're in business and you know that your supply chain is potentially tainted with modern slavery, this is something that most businesses want to address. And it's something as accountants that we really need to be cognizant of and consider. And the reason we need to is we have an obligation to uphold ethical standards and moral standards within society. This is why society trusts accountants. But there are many challenges for businesses looking to do this. For a start, businesses do not understand the problem, and there is currently a lack of suitably qualified staff to help them. This is a huge problem that we're seeing internationally. And many businesses, especially large businesses, do not have a clear picture or understanding of the makeup of their supply chains. I've gone and interviewed a number of Australian businesses, and they do not know how many suppliers they have. They don't know the countries they're located in. And this is quite shocking. And you also need to consider there are two supply chains when we're talking about potential slavery risk. One is the product supply chain, and one is the labour supply chain. And what about the value chain? So there are lots of things that need to be considered here. So now I'm going to get into some of the reporting. So a big question here is, so we've got this problem of modern slavery. The business sector is obviously heavily involved in modern slavery. So what are governments doing about this? Well, we're starting to see a very big trend worldwide, which suggests that business is a part of the problem, and therefore it must be part of the solution. So what does this mean? This means we are seeing an increasing number of due diligence and modern slavery specific acts being put in place by governments around the world. And this means increased reporting requirements for business and the introduction of annual modern slavery statements. And the interesting part is when we see this legislation coming into place worldwide, even if your business or the businesses you advise are not located in countries where modern slavery reporting is mandated, it is very likely that they will ultimately get dragged into the process of modern slavery reporting through their supply chain relationships. And I'll talk about this in a minute. So some of the legislative examples from around the world. One of the early ones, and this surprises many people, was the California Transparency in Supply Chains Act 2010, which applies to large manufacturing and retail organizations in California. They had to produce an annual statement saying what they were doing about modern slavery in their supply chains and modern slavery risk. That was quite a weak form of law because organizations could satisfy the requirements by saying they were doing nothing. But then we started to see more developments. For example, the United Kingdom Modern Slavery Act 2015, which took this one step further, not just applying to retail and manufacturing, but to all businesses with a minimum revenue threshold. In 2018, we saw the Australian Modern Slavery Act. Again, this requires the publication of an annual modern slavery statement. In recent years, we've also seen the German Supply Chain Due Diligence Directive, then the EU Corporate Sustainability Due Diligence Directive, which is currently in process. These are not modern slavery specific, but they include a specific human rights element, which organisations will have to undertake due diligence with regard to and also report on. So although they're not modern slavery specific, modern slavery, forced labour, child labour are big elements there. And then we have the US Uyghur Forced Labour Prevention Act and the United States-Mexico-Canada Agreement. These pieces of legislation and agreements are going one step further, and they are actually looking to ban the importation of goods that are suspected of being made with forced labour into these countries. So that's really taking it one step further. So if we look at the current approaches when it comes to legislation, we can see we've got transparency-based approaches. That is based on reporting, annual reporting, trying to encourage organisations to be transparent about their activities. We then see due diligence, where it's not just about transparency, it's about transparency and an obligation to actually undertake actions to minimize modern slavery risk. And then we see actual import bans. So there are different levels of legislation. And if you are supplying goods, or if you have customers operating in any country that is subject to any one of these pieces of legislation, chances are you will start to get dragged into this type of reporting requirement as well, and you will have to provide information. Now, following on from the questionnaire we did, the last question we asked respondents, we provided some definitions of debt bondage, forced labour, etc., and modern slavery. And we said, with the definitions of modern slavery that we provided in mind, to what extent do you think each of the following practices is a problem in Sri Lanka? And you can see that most of the 74 respondents thought it was certainly a problem, all of them to some extent, and a number of respondents even said to a great extent. So if this is what you think, and you know that this is probably a problem in Sri Lanka, the business partners you deal with are likely to also know this. And so they're going to ask questions of the Sri Lankan businesses they deal with. And so a question that you need to ask yourself is your business, or are the businesses that as professional accountants that you advise ready to respond to requests for information from buyers located in countries with new modern slavery legislation? Very important question. So what does this mean for business? You've got to start asking yourself some questions. And the first one is, how well do you know your supply chain, your labour chain, and your value chain, both domestic and international? If reporting entities come to you and ask you for information about modern slavery risk in your supply chain or labour chain, you've got to be prepared to provide information and to answer some of these questions. You also need to go about assessing your modern slavery risk in direct operations and supply chains. This could include product risk. Do we look at products that are risky? Do we look at country risk? What about supplier risk? Has that supplier had a specific issue before? What about financial risk? What percentage of our financial commitments relate to that person, etc., that organisation? What about investments and financial resourcing? Big problem for banks. Do they need to take into account modern slavery risk when making investments and when lending money? What does best practice modern slavery risk management look like? This is an area that we are still researching. Modern slavery reporting is a relatively new area globally, and businesses and researchers such as myself are still very much working hard trying to work out what best practice modern slavery risk management actually looks like. And another one, who should be responsible for our modern slavery risk management strategy and approach? In my own university, we've got a procurement manager who is in charge, but he works with legal, he works with accountants, so it really is across different disciplines. And accountants will be involved when it comes to modern slavery risk management for a number of reasons, and I will talk about that shortly. So if you're in business, regardless of if you're a reporting entity or if you are being approached by an organisation that is a reporting entity under modern slavery legislation in another jurisdiction, you're going to have to undertake some activities trying to see what risks you are exposed to and what this ultimately means in relation to your business. Now, one thing that we have seen coming from Australia, coming from the United Kingdom, the United States, etc., is that many organisations are really scared that, but if we look hard enough, we're going to find something, and they're worried about the potential public backlash. So what we see is we see an approach of I see nothing, I know nothing, I hear nothing. So it really is, if I don't look hard enough and I don't see it, it doesn't exist. But that's called willful blindness, and that is really not good enough anymore. And non-government organisations in particular, academics such as myself, are really starting to call that out, okay? And you have to understand, if you look hard enough, you are going to find something. Modern slavery is that prevalent. If any contemporary organisation of a certain size looks, they are going to find something. It is inevitable. So, what's going on here? Oh, here we go. Come on. Oh, there we go. And part of the reason for this fear is lack of education on this issue among business professionals and the public. So one of the things that we all need to do is we need to start to educate ourselves with regard to what this means, what it means for us as business professionals, and what it also means for us as members of the public. So what I try and encourage is, obviously businesses are very scared. A lot of businesses are terrified that they are going to be on the front page of the newspaper with a sweatshop story, or, this company A is supporting slavery. But I would like to turn this around, and I would like to propose, what about if we treat this differently? What about if we take a proactive response? And business does have an opportunity to control the narrative in a positive way. And so I like to call this naming and faming. You will see a lot about naming and shaming, and that usually happens when a non-government organisation, for example, finds an example of modern slavery in a supply chain. The business hasn't looked hard enough. They feel the business hasn't been doing the right thing. The business really should have known it was there. And so that's when you become that front page news story. But I think we should also name and fame the really good responders, the ones that are doing a really, really good job. Now, I'm not sure how many of you have heard of Andrew Forrest. Andrew Forrest is one of the wealthiest people in Australia, and he has been a modern day slavery abolitionist. He has put billions of dollars into funding research and initiatives through the Walk Free Foundation, which is one branch of his NGO that he founded called Minderoo. And when he started looking into the supply chain of his company, which is Fortescue Mining, he was quite shocked to discover that they had modern slavery in their own supply chains. And so in the end, he started to think about this, and he said, well, if you look hard, if you look properly and you find nothing, you should celebrate. But if you look and find something, you should celebrate more. And an interesting question here is, when is modern slavery a good thing? Obviously, most of us would say, well, modern slavery is never a good thing. But if we accept that there are 50 million people currently enslaved worldwide, and that if we look hard enough as a business, we are going to find something in our supply chain, well, then the answer is, when is modern slavery a good thing? It's when you find it, because when you find modern slavery, that is when you can actually do something. You can actually undertake some actions to correct modern slavery. You can actually look at remediation. You can look at whether to cancel a contract with someone or whether it's worth working with that supplier. And what you can then do is you can actually front the media, because that's a good thing. You found it. You can say, compared to our competitors, we've undertaken a modern slavery assessment. We have located that we do have a number of suppliers who are engaging in acts that we consider to be unacceptable, but we are now working with them, etc. So there is an opportunity to control the narrative and to be more proactive, to name and fame, but we have to let go of that fear and accept that transparency in this area is a good thing. Now, what is the role for accountants here? As I said, modern slavery is a topic, and dealing with modern slavery in business really transcends all disciplines, but there is a role for accountants. For example, if as an accountant, you try and you make a management decision to reduce costs, and you tell a supplier, we're going to reduce the amount we pay you, think about what the ramifications of that decision might be. So accountants are business partners these days. We're really moving on from the days of the traditional bean counter, as some used to say. So we're business partners, we're strategists, and so accountants can assist business to develop strategies to respond to modern slavery risk. And I think that's really important. And I think it's an area where accountants need to really upskill and learn how to assist organisations in this space. And then help business put in place modern slavery risk management systems, modern slavery management control systems as well. How can we harness our management control systems to try and minimise our slavery risk and to better manage our slavery risk? As I said, reporting is a huge part of the global response at the moment to addressing modern slavery. In addition to the legislative acts that I mentioned earlier, Canada has just passed modern slavery legislation that will also have a reporting requirement on it. That was passed about a month ago. New Zealand is currently considering similar legislation. So accountants, we prepare reports. We collate information, we prepare sustainability reports, we undertake sustainability accounting. So accountants can help prepare modern slavery statements and reports that may be required by an increasing number of legislative acts around the world. And the information, this can even be used for internal reporting. This can be used to satisfy the requirements of large international buyers. And even if Sri Lanka doesn't have mandated modern slavery reporting in place yet, if we look at what's happening around the world, there is a good chance this will come into place at some point in the future. Sri Lanka is actually ranked relatively highly when it comes to the government approach to combat modern slavery. So that is something I would expect probably in the future. And so by preparing yourselves now, you can really get ahead of the game. Providing assurance that the information contained within modern slavery reports is accurate. Accountants are all about assurance. We're all about auditing. So how can we help provide assurance that any information about modern slavery risk that we provide to international buyers or that we report is accurate? Accountants can help there. And finally, forensic accounting to help monitor risk and look for red flags in relation to transactions and in contracts and business relationships. The Institute of Chartered Accountants, England and Wales, has in particular done some very interesting research in this space. And they are advising all accountants in professional practice and in management roles to keep an eye out for financial red flags in transactions which might suggest a modern slavery risk. So what does all this mean moving forward? Modern slavery reporting and accounting for modern slavery risk are very, very new areas globally. We are seeing national legislation being put in place and even regional legislation, as I mentioned earlier, with the European Union and their due diligence in supply chains directive. Human rights related, but modern slavery is a big part. So it's a very new area. So what are we starting to see from other countries? Well, one thing is that cooperation between competitors in key industries is the way often to get the best result for the lowest amount of cost. So sometimes you need to have a bit of trust. Trust your competitors, talk to them. If you have key suppliers in common, it makes absolutely no sense that you are both going out to talk to that supplier about the same issue in slightly different ways. So working together is more effective in terms of the modern slavery implications, and it's also more cost effective for the business. There is a need for multi-stakeholder engagement on this issue. Don't underestimate the knowledge and guidance NGOs can give you in this area. Academics, such as myself, we are here and we can help you in this area as well. You could also have government agencies and representatives. There is also a need for executive level education and a broader level of education about modern slavery among the public. Now, some of you might have heard of social audit. Social audit is a process where you try to check what a supplier is doing by physically visiting a factory or a site and assessing practices. However, this has been shown to have a lot of shortcomings, and so it can be an important tool, but we also need to move beyond this. How can we do this? Well, we need to develop tools to help with collecting information along the supply chain. And this is both the product and the labour supply chains. So we need tools that protect workers, and we need tools to enhance product traceability. This information can then feed back up into your management systems and ultimately into your modern slavery reports if you're in a situation where you have to report either to international customers or in due course under Sri Lankan modern slavery legislation if that gets put in place. And I think one of the key things in all of this, it's easy to get stuck in the minutiae. It's important that you keep the victims front and foremost in your mind, and especially when you're trying to take that proactive response and to control the narrative. So make sure the victims are front and foremost in your mind, that you have appropriate remediation. If your companies don't currently have good remediation systems in cases of modern slavery, start thinking about it now. As I said, if you look hard enough, you will find something. And so you need to think right now, how am I going to deal with that? And unfortunately, this is one area that we have seen in Australia, the United Kingdom, and the United States that hasn't been dealt with that well yet. So this is something that really does need to be addressed in due course. So modern slavery reporting is a very new area, but it is not going away. It is only growing in prominence, and it's also explicitly recognised in the United Nations Sustainable Development Goals under 8.7. Unfortunately, we don't look like we are going to eliminate modern slavery by the year 2030, but with some of these legislative developments, we can certainly make progress. So as I finish my keynote talk today, I would like to leave you with a closing thought. This is a portrait of William Wilberforce. When the transatlantic slave trade was abolished, he was a key mover and shaker in England who worked towards getting that legislation put in place. And when he did this, he made a statement. He said, "You may choose to look the other way, but you can never say again that you did not know." Each of you who listened today now knows about the problem of modern slavery. You know how it impacts business, and you know how reporting can help to combat it. So you can never say again that you did not know, and I hope you will all take this knowledge forward in your business careers. If we can all try and save at least one person, we are making progress. Thank you, and I will now have a look at any questions that you have. Okay, I'm just having a look at the, I think there are questions in the chat and also some of the others, so I'll just have a look down here. Okay, sorry. In relation to one of the questions here, it says most of the professional training like accounting, law, training periods always use modern slavery. Am I right? There is no standard pay structure. many accounting students are working in big firms today. I think what you are referring to there is what we would call very poor working conditions. Modern slavery is a condition where the victims, the individuals, cannot leave. That could be because they are being physically threatened, they are having a debt held over them. It could be that they have had their identification documents, in the case of a migrant worker, taken away. They are literally unable to leave. So some people refer to what they call white collar modern slavery, which is very poorly paid interns or interns that don't receive pay. But those people are often making a choice to work there and they can leave. So although that is abhorrent, in my opinion, and it is poor working conditions, it is not necessarily modern slavery. So I'll just go up now. I'm not sure about CPD links for members to update in relation to this area. I am currently working to put in place some continuing professional development materials for a couple of professional accountancy associations, but I do think this is something that will become more prominent in the future. Yes. Our companies currently reporting about modern slavery in annual reports, such as their supply chains. Yes, we are starting to see more and more companies reporting about modern slavery. If they are in a jurisdiction which relates to a Modern Slavery Act, where they have to do a separate statement in Australia, these companies need to produce an annual modern slavery statement. They have to have a link on their homepage and it has to contain certain information. But we are seeing organisations from other jurisdictions starting to report on these matters as well. Another question here is there any framework available for reporting? Most of the modern slavery acts around the world have specific requirements for what needs to be reported. In Australia, companies need to look at the makeup of their supply chain and operations. They have to consider where the modern slavery risks exist. They then have to say what they are doing in order to combat and try to reduce and address the modern slavery risks, and then how effective they have been. And a question has just come up about whether these statements are audited. In most cases, no. And that is a very big problem moving forward for modern slavery reporting. As I said, how can we assure that the information provided is accurate? So it's really quite complicated, but it is an area where we need a lot more research. The big four firms I know are putting a lot of resources in Australia, in the United States and the United Kingdom into this area. There's another one here. Is there any or are there any formal procedures to benchmark and to disclose through the statement and how to derive a financial consideration? This is generally not linked to the financial information and statements directly. Benchmarking would be a wonderful idea, but at present there is no benchmarking, but I do know some really exciting research where a very good mathematician and artificial intelligence specialist is undertaking a project to see if we can use artificial intelligence to actually rate the quality of the statements and the information provided and benchmark how everybody is actually going there. So I think, yes, there is certainly something there. So I'm just going to come back here. So I'm not quite sure I understand one of those questions there. So I'm just going to go back to the chat. I see some others here. Basically, no, a lot of organizations, is it voluntary reporting? In countries where there is no Modern Slavery Act in place, it is mandatory. Sorry, in countries where there is a Modern Slavery Act in place, the reporting is mandatory. Although if you do not meet the reporting threshold, which is 100 million revenue in Australia, organisations can still choose to voluntarily report. If that is the case, they still have to meet the same standards. So we have a combination at the moment of voluntary reporting and mandated reporting. One of the big problems we have seen in relation to some of these countries is that there haven't been any penalties for non-compliance, which many have argued has driven down the standard. But we are now seeing that Canada, the act they're putting in place, is having penalties. So if you do not follow the minimum requirements, if you make false or misleading statements, you will be penalised, and also the European Union. This is probably going to come into place in other countries as well. So although we have this mix of voluntary and mandated reporting, ultimately we are getting to the point where penalties will be imposed if the information is not accurate. Another question here, I think this might be the last one. How does cultural, contextual factors, how would they be considered in determining, just got to go down here. Oh, sorry. Oh, here we go. In determining the level of exploitation and severity of it, it may differ. Absolutely. Cultural factors and contextual factors are very important, and that's what you would take into account when assessing modern slavery risk. There are a number of indicators and indexes online that can help you assess modern slavery risk related to industry and location, and that can help you. And in certain cultures, it is much greater. And I'll just, on the Q&A here, if I've got time quickly, can you give some real world examples regarding the topic? Very quickly, in Australia, the worst case I heard of was backpackers from Europe who ultimately were kept in animal cages, unable to leave, had their identification taken away while they were out working in the agricultural sector. And in the Thai fishing industry, there was an example of one worker who was actually hanged, and the body was left hanging from a fishing boat that was supplying international supply chains and large businesses, and they left the body there to try and encourage the others to work quickly. So some extreme examples, and I'm sorry I can't get to all of the questions, but I hope you've enjoyed my talk today, and I hope you've learned a lot more about modern slavery.
Thank you very much, Dr. Catherine, for sharing your experts' insights on modern slavery reporting. Truly, it was a fruitful session. Ladies and gentlemen, as we continue our exploration of the dynamic field of accounting, we had a wonderful opportunity to hear from our esteemed industry partners who have graciously joined us to share their honest feedback on our internship program, Internship in Accounting. We believe that their insightful opinions add values and enhance the quality of our internship program. An internship is a learning process in a business environment, providing opportunities for undergraduates to apply theoretical classroom learning into the world of work. As employers view internship training as an essential and value-added qualification for undergraduates, the Department of Accountancy (DOA) embedded an internship in accounting course to its degree program since 1999. DOA takes immense pride in the quality and originality of its internship program. We believe that internships play a pivotal role in shaping the future of young professionals, as we are committed to providing an exceptional experience that stands out from the rest.
3 accounting bodies of ACCA, CS Sri Lanka and CIMA have structured training program to develop their students to make them chartered accountants. So in this context, I really believe for a success of a degree program, it is very much vital to have a structured training program. And when I look at the training program of University of Kelaniya, the Department of Accountancy, I see that they have made a lot of efforts in developing a proper program over the years.
Almost all the required trainings for the finance intern, that includes accounting, auditing, taxation, and information technology. That means it is a comprehensive training program.
Digital internship system in the fourth year of student life is, I think, a very good initiative done by the Kelaniya University. Digital internship system introduced by Kelaniya University. I think that's a good initiative because students are getting used to reporting and monitoring on an online environment. It replicates the corporate working environment in a digital format or a portal, which is a good thing done by the Kelaniya University. And I think students are given the opportunity to practice their skills in a computerized environment or using a computerized tool.
This is where they start their first working experience as the first employment, and then they start to be independent from the commencement of this experience. So with the monitoring that is being done by the University of Kelaniya, so they are able to work confidently and also get employed elsewhere because they will be sufficient with adequate practical knowledge as well, in addition to what the theoretical knowledge that they get at the university.
The University of Kelaniya has been associated with EY over many years through its internship program. And EY continues to recognize the University of Kelaniya as a partner in our business. We appreciate the tremendous amount of work that the University of Kelaniya, particularly the Department of Accountancy, has done with its students.
DOA always believed that internship training should serve as a bridge between academic learning and the practical skills needed in the professional world. Thus, the internship in accounting program of DOA is well aligned with the industry requirements to create 100% of employability for its graduates soon after the graduation. Our statement on the alignment of our internship program with industry requirements encompasses industry-driven curriculum, collaboration with industry partners, industry expert mentors, and experiential learning opportunities.
Lots of the organizations like ours try and create a work culture where students can flourish, be creative, be responsible, be accountable, all those aspects. But creating a culture is like having two hands to clap. You cannot clap with one hand. So every organization can have a lot of systems and processes to create the culture, but we need the students buy-in as well.
The University of Kelaniya, they have developed their internship program, so which has to cover about 1,000 training hours, covering auditing and assurance, financial management, management accounting, and taxation, company secretarial work, etc. So this is something that they need to do over a period of 1 to 1.5 years. And so they will be working with PwC, the rest of the staff during this period. And they will be located in, most of the time they will be located at the client places starting from day one.
It's truly a remarkable program that is carried out. And I've seen that firsthand through the students that have come through our system.
With the aim of enhancing the quality and the standard of internship programs, the Faculty of Commerce and Management Studies, University of Kelaniya introduced the Digital Internship System, DIS, a fully fledged online internship recording system, replacing the manual training records of all degree programs at the faculty. Hence, the DOA undergraduates and training partners can access DIS around the clock from anywhere. And this system is facilitating reporting, retrieving, and evaluating of all training records in electronic form. Moreover, DOA takes immense pride in the commitment and capabilities of our students, as our department is home to a diverse community of passionate learners who exhibit exceptional dedication, talent, and potential.
university in Sri Lanka as well as globally has introduced the internship program with a digital platform internship system, which enables the supervisors and undergraduates to view and also amend, also comment and approve on daily cadence on the work experience in different divisions of their experience. So this is one of the good platform which we have as a MS group, we have figured out, which can be rolled out to the rest of the university as well.
I have worked very closely with several past and present students from the University of Kelaniya. And there have been many an instance where I have seen diligence, dependability and agility amongst the students when they are confronted with difficult situations.
Especially the accountancy students when they get, what I have seen is I have seen much enthusiasm from them compared to other peers. And also when you look at the training and also the qualifications and in terms of completing their exams, the CA, CIMA, or ACC exams. So I have seen that they are completing them well in advance compared to the rest of the peers and colleagues in the firm.
I also got my degree from the same department, University of Kelaniya. So I also got this opportunity of getting my practical training while reading my degree. However, now I'm seeing a great improvements in this program. They have introduced a digital platform to this program, and they have allowed all the trainees to record through this digital platform, and the trainers to give their comments and feedbacks through the same platform. So I'm seeing a lot of involvement in the lecturers there, and their commitments and involvement is highly appreciable.
The digital internship system, so they are now able to submit their records digitally. So that has really helped both supervisors and also the students. It has really become user-friendly for both the parties. And also the monitoring process has also improved as a result of this. End of each semester, so they will be submitting their records digitally. So that will get evaluated by the University of Kelaniya as well.
Further, DOA undergraduates demonstrate a strong commitment to academic excellence. They exhibit a genuine passion for their chosen field of study and strive to achieve the highest standards of achievement. Their dedication is evident through their consistent performance and willingness to go the extra mile to acquire in-depth knowledge and skills in their career. Further, our undergraduates are a unique and exceptional group of individuals who bring a wealth of diverse experience, skills, and perspectives in academic community. Their uniqueness is reflected in their backgrounds, skill sets, entrepreneurial mindsets, passion for the social impact, adaptability, thought leadership, and collaborative spirit. We are proud to provide an environment that nurtures their uniqueness and empowers them to thrive and make a lasting impact in their chosen field in the industry.
Dedication, teamwork, and the value to add value to the processors and network with the clients of MS Group of Companies is one of the commitments of the University of Kelaniya students I have encountered.
Talking about the students at PwC that we have from the University of Kelaniya, from the Department, Accountancy Department. So what I have seen is over the past years, they are above average, and then they have performed well in their careers compared to other staff as well.
We assign them some sort of responsibilities.
As internship training is pivotal in providing valuable experiences and preparing young professionals for their future careers, DOA is highly committed in maintaining a high standard of quality in the internship in accounting program. Further, DOA prioritized the importance of practical training and experiential learning as integral component of a comprehensive education. Thus, DOA embraces a culture of openness and encourages students to pursue training opportunities that align with their career aspirations from third year onwards by conducting online lectures, maintaining flexibility in the study plans to accommodate internship training.
So one of the good things that the University of Kelaniya has done is they have made arrangement for the flexible works. So basically they can work after, they can attend their lectures after office hours, so they can do their work or professional work or whatever office work without any hassle. So with the the monitoring that is being done by the University of Kelaniya, so they are able to work confidently and also get employed elsewhere because they will be sufficient with adequate practical knowledge as well, in addition to what the theoretical knowledge that they get at the university.
The learnings that they have received from the university undoubtedly is a key factor for them in tackling all of these issues. And I wish to commend the university and the department for this.
DOA is committed to fostering a flexible environment that allows students to pursue training opportunities alongside their academic studies and encourages students in their training endeavors, providing a framework that accommodates their needs while maintaining the required academic standards. The aim of DOA is to equip our undergraduates with the skills, knowledge, and experience necessary to thrive in their chosen field and contribute to their future professional success. With that expert opinions on internship in accounting program, ladies and gentlemen, this is the high time to express our deep gratitude to our training partners for their tremendous and continuous support in uplifting our internship program to the highest potential. Ladies and gentlemen, it's with great excitement and anticipation I'm revealing the next line item of the agenda, the industrial talk on sustainability reporting global developments. As we navigate the complexities of the modern world, the need for sustainable practices and responsible business conduct has become more crucial than ever before. Hence, we take the distinct honor of welcoming a distinguished speaker who is at the forefront of driving global developments in sustainability reporting. He is none other than Mr. Sharath Martin, ACCA's Senior Policy and Insight Consultant for the Asia Pacific region. He works extensively on thought leadership and professional insights on contemporary business issues. Prior to joining ACCA, he held senior risk and strategy-related roles primarily on a regional basis. These included with a Big Four firm, a large listed company with global operations, and the Malaysian capital market regulator. Having worked through Asian and global financial crises and now the pandemic and climate-induced crises, Sharath firmly believes in the need to think and act long-term in a short-term world. He is also a fellow of Association of Chartered Certified Accountants. Ladies and gentlemen, let us now invite our esteemed speaker, Mr. Sharath Martin, to share his wisdom, experience, and expertise with us.
Excuse me, Mr. Martin, can you hear me? Yes, though we can see you, we can't hear your voice actually. Yes, Mr. Martin, can you hear us? Yeah, I think there's an issue with your microphone. You are unmuted, but we can't hear you actually. Mr. Martin, can you reconnect with your audio again?
Can you hear me now?
Yes, Mr. Martin, now we can hear you. It's perfect. You can continue.
Actually, no, I'm hearing you through the headset. But you can hear me?
Yes, of course, we can hear you. Now it's perfect.
Okay, this is a little unusual because I'm hearing you through the headset, but I'm speaking to the computer, I think.
No issue. We can continue now.
Okay, so we just finished first poll question. Do we have the second poll question, please? There's another poll question. Is it appearing? Oh, okay, it is. Okay. All right. This is really useful. I'm just going to take a screenshot of it. This might be also useful for the university to recognize where the audience feels they would be likely to be involved with this whole issue of sustainability over the next few years. All right, so maybe we just close off and we'll start today's presentation. So a little bit about ACCA, for those of you who are not familiar. We are a rather global professional body. We've been around for quite a while, more than 100 years. And we can see the number of members and students that we have. But what's more important, I would love to highlight, is that more than 50% of our members are based outside of UK. And that really gives us an opportunity to understand what's happening in the different parts of the world, and to also feed that back to accounting standard setters, as we have done with this issue of sustainability reporting. So let me just move on, because I know we've lost a bit of time. So I come from this part of ACCA where we do professional insights. And so this is where we look at contemporary business issues. And like our tagline says about thinking ahead, we try and look forward as to where we think the profession is going to be, how these current business issues is going to change the way the finance and accounting profession is going to be changed. And earlier today, you heard Dr. Catherine speak about modern slavery. And this is an important issue as well. And I'm so glad to see that the University of Kelaniya are looking at this issue very seriously. Anyway, the function that I come from, we've had more than 150 reports on sustainability. If you're interested, there's a link in there, you can have a look. Now, I asked a question earlier about how many tons of CO2 are emitted, 2022, that's a projection. And about half of you were close, which is, it's about 38 billion tons of CO2. But I thought I would show you what 1 ton of CO2 looks like. And this, therefore, takes you away from thinking about CO2 as some colorless gas, but rather if you look at this in a perspective that this is how huge it is. And it's in 2022 alone, there were 38 billion tons of CO2 that we had emitted. And that is a lot. And I want you to just, take a moment to pause and to reflect on that. The next point, and I'm just going to spend a couple of slides putting some context in here, is that the World Economic Forum had made a clear point that more than half of the value, or if you prefer GDP, that the world gets is highly dependent on nature. There are certain industries like construction, agriculture, and F&B where there's strong correlation from nature to business value. But there are a whole bunch of other industries which sometimes is the point of what we accountants need to really start thinking about. Dr. Catherine talked about the value chain, but this whole issue of value chain is very close to my heart. Because COVID taught us that you cannot just look at your supply chain, you have to look at who is your supplier's supplier, who is your customer's customer. Dr. Catherine was talking about this from a modern slavery perspective. I'm talking to you about nature and climate and a whole bunch of other things that are wrapped around this issue. So understand that half of the world's value in GDP comes from nature. Therefore, if you disturb this issue with nature, you're going to face economic consequences. Now, the other point that I think isn't perhaps as well appreciated, and I hope you as accountants will get this, is the fact that we have this idea of a remaining carbon budget. And what does that mean? It simply means that since they have been able to track this since the 1750, we have already been emitting a large amount of CO2 into the atmosphere. And to keep to a 1.5 degree world, we can only emit another 380 billion tons. To keep to 1.7 degrees, you can see the numbers and so forth. Now, the scientists, this is a calculation by scientists, not by accountants. This is a calculation by scientists that says that a 50% likelihood that we would bust this in the next 9 years or so from 2023. Given that what you answered in the poll, it's about 38 billion a year, you're running down the clock on this very, very quickly. And I want you to appreciate that, because there's a part of what you hear, which is to get to net zero by 2050. I'm here to remind you that if we continue as is, by the end of this decade, we would have already reached 1.5 degrees. Again, that's probably a 50% likelihood, but as an accountant who has grown up on the basis of prudence, I don't like these odds. I would much rather see that we are dealing with this better. So today's presentation is to share with you a couple of things that we are seeing as a global professional body. And so the perspectives I'm going to share with you are on global standards, not on regional or country specific. That might take us a few days. And then I'm going to talk to you a little bit about some developments in sustainability assurance. Both of these things are going to affect your lives in this decade for sure. And I'm pretty sure in the next few decades as well. So let's start with this, because you would have already heard by now that there's this body called the International Sustainability Standards Board. They've issued 2 exposure drafts. These 2 exposure drafts are likely to be approved next week, in fact, which will have an effective date of the 1st of January. Now, that's tentative, but at the moment it is looking like that. Now, for those of you who get a little concerned about this, please understand that when a global accounting standards body issues standards, it doesn't become automatic in your country straight away. That requires your own national standard setting bodies, as well as around the world, to adopt them locally, and then to make their own determination. They can change the transition effects, transition period, they can change the effective date. And from what I'm hearing in many parts of the region, they're not likely to look at the effective date of 1st January 2024. It's likely to be 2025 at the very earliest, and possibly even later. Now, you might think that's a good, bit of space or news, because it gives us more time to prepare. But remember the pie chart that I showed you. Time is not necessarily on our hands. So we have to get close to this whole 2 standards. We have to understand what it requires and understand that there's a lot more to come. And I will share with you in a bit also how the European standards are shaping up very quickly. So the first one, the first standard, exposure draft, but it's going to be standard soon, is the general disclosure standard, and that is going to be a gap agnostic, which means it can be applicable across various jurisdictions. And the first point of order is that it is asking for sustainability risks and opportunities to be identified. And then, because we're always dealing with materiality, the disclosure of material information. So I think many of you all would have already heard about the TCFD, which is the Task Force for Climate-Related Financial Disclosures. This came about several years ago under the leadership of the then Governor of the Bank of England, Mark Carney, who has gotten the G7 countries to make this mandatory reporting. And from then it has grown. And the idea that ISSB has adopted, which I think is very important, is not to start again, but rather to adopt reporting frameworks that are already around, but it has the massive headache of trying to ensure the harmonization of the frameworks and to adopt and to push one out, rather than having to deal with so many standards and frameworks to choose from. The important thing is that there needs to be consistency between the financial statements and what you disclose in your sustainability report. Second point is they have to be published at the same time, although there's a transitional relief for about a year. And the disclosure location, as in, I don't mean which country, I mean where will you disclose this information, is not specified. So that means that you have some flexibility, and jurisdictions will have to make their own determination of where this will be. My own view is it will not be in the notes to the accounts, because the moment it is in the notes to the accounts, it is part of the financial statement. If it is part of the financial statement, it will have to be audited. And I will tell you why that space is unlikely to be in the first few years, but over time expect that we will get to that stage. Okay, so IFRS S2 is on climate-related disclosures, and this is the big one, right? So IFRS S1 has set the foundation, and after which you're going to have climate, after which the ISSB is currently taking feedback on their agenda priorities, how people like us want to see the ISSB take on new standards. What should they be? Should they be on biodiversity and nature? Should they be on the value chain that Dr. Catherine spoke about, labor issues, etc. Right? So we'll talk about that in a bit. But what it does in S2 is it incorporates, as I said, TCFD's recommendation. It follows that structure of governance, strategy, risk management, and metrics and targets. And I will share with you a little bit about what this is. And also findings from the study that ACCA did with the University of Glasgow has been how ready are companies in disclosing up to S2 standards. Now, there's another part to this standard where it has an appendix which uses industry-based disclosure requirements from the American standards body, which is SASB. Now, at the moment, these industry-specific metrics are included as illustrative guidance, and that's likely to be even when they issue it next week. I was just at a call a few hours before attending today's event where we were hearing from ISSB, and they're doing a lot of work to recognize the comments that we provided to ISSB, that a lot of the language in here were perhaps better suited to a US environment, and they needed to make it more applicable to international standards and frameworks and industry metrics that would ensure its greater applicability. So we heard that they are going to do it, but I think we will know in about a week's time how well this is addressed. And like any evolution of financial reporting, it will continue to improve over time. Now, back to S2 a little bit in terms of what does it require disclosure. It requires disclosure about physical risk. I've given an example of flood risk, but it could also be heat risk. It could also be drought risk. There's also transition risk, which many people associate simply with regulatory change, which means that the country has issued some laws and policies and climate change and how certain industries will be impacted, certain obligations on getting to net zero will be put in place. So that's one part. But companies can also decide to get to net zero by a certain time. And as they do that, they're going to have to transition out from certain, let's call it an unclean business model in the sense that it's using unclean energy, and it's going to have to pivot towards greener and cleaner energy. All of that would mean the transition process might make certain assets stranded, or you might prefer the word redundant, and that could give rise to impairment issues as well. So there are a bunch of things. I just want to highlight that it is not just sometimes about laws. It's also about the way your business is looking to implement these changes. Okay, so I spoke quite a bit about TCFD, but this is now the flesh and the bones. So under governance, you would look at the processes and controls and procedures that you use. It might seem very innocuous, but let me tell you that against the kinds of sustainability reporting issues that you face, against the kind of greenwashing risks that you face, you need to take a lot of interest in what are the processes, what are the controls that you have to ensure that you're getting the right data, you're not missing out on data, etc. Right? So you're going to have to take a hard look at this. Strategy we kind of spoke about, which is how your strategy would affect both the opportunities that you pursue as well as the risk that you face. I'm mindful that Sri Lanka is an island, and therefore it will face its own challenges to some extent. But the business operations sometimes is not just limited to Sri Lanka, and therefore you have to start looking at your entire value chain. Where do you get your materials from? Where does that supplier get the materials from? How are they impacted, by the various risks that we are facing from nature, from climate, and start considering that. As well as, again, if you move beyond S2 in time to come, we will have to look at the value chain, the labor implications from your own workforce and from your value chain. So these are some of the sort of principles that TCFD has, which I hope you will find useful and that you've already started to think about. Now, I should pause and mention here that ISSB recognizes that when they came through with these first few standards, there was a lot more educational materials that they need to put out, and they're working on doing that. That I think is almost their major priority. One of that is including the scenario analysis, which uses a TCFD guidance, but it still needs to come out. The industry-based climate disclosure that I talked about, as well as how would you measure scope 3 GHG emissions, which is a huge topic. And then if you break down some of the scope 1 and 2 GHG emissions in terms of what are the entities you consolidate and those you don't consolidate, how do you disclose that information? So the point here is ISSB is really looking at the kinds of educational material it needs to put out in short order to help the profession and the practitioners out there to deal with the implementation of these two standards. Okay, this is the research that I spoke about that ACCA did with the University of Glasgow's Adam Smith Business School, where we looked at how well was IFRS S2 being adopted. And again, this is of course an early stage adoption, but it gave us an indication of where the challenges could be. And we looked at large companies, no doubt, large and highly polluting companies in two industries, chemicals and constructions. And some of you may already know this, IFRS S2 has a whole lot of disclosure requirements, right? Governance, 8, strategy, 50, risk management, 11, and metrics and targets, 33. So what did we find out? So I think the basic point is, that those that have already started the journey using TCFD recommendations, they were better prepared. But there's still a lot of work to be done. As you can see from here, the average disclosure score was not very high. It was 41%. Those that claim compliance with TCFD recommendations had already started the journey was slightly better, as well as with SASB. But those that don't reference any standards whatsoever scored very low. And that tells you the kind of implementation journey that will take place. And now I've been speaking to a lot of CFOs around the region as to what is their experience. And in fact, this is their experience with TCFD, never mind S1 and S2, that just with TCFD, and this is a large company, that it took them almost 18 months to get the governance, the data, and the process right. And that's so critical. And that's with large companies with the kind of resources that they have, people resources, financial resources, talking to the right experts, etc. So my point is, to the audience is do not underestimate the kind of time preparation work that needs to take place to disclose to S1 and S2 and future standards. Now, when it comes to the new requirements, this was completely uncharted territory, right? So none of them had disclosed the impacts on carrying amounts of assets and liabilities. None of them had disclosed, what the target review process was for climate adaptation and mitigation. as well as scenario analysis. Right? Quite a number were disclosing their upstream and downstream Scope 3 emissions, which is a good thing. But here's the important bit, which I think is really, really important. The how it is measured is where people are struggling. Only a quarter of those have disclosed. And this is also the feedback that we kind of shared with ISSB, as I said, in a forum that we had with them a few hours ago, where there's a lot of guidance around what to disclose, but there isn't a lot of guidance around the how do you measure the things that you're going to disclose. So, at least to some extent, ISSB is openly engaging with various people in the ecosystem, and we continue to use these opportunities to bring the issues to them to discover. Now, I just had a quick slide here about why does Scope 3 matter? Because just from a US example, if you look at the difference between Scope 1 and Scope 3, because of the way companies are outsourcing their business, their manufacturing to different parts of the world, they may not be seeing a lot of Scope 1 emissions, but the Scope 3 emissions is huge. And this is, my friends, is a very important point, because when you look at emissions by country, it doesn't take this into account. So one of the reasons China is the top emitter is because of this. So I'll ask you a question and I want you to just think about it. Now, who does this emission rightly belong to? To the producer or to the one who requested it, i.e. the consumer, i.e. the buyer? So just think about this, because you have to be very careful when you read data. Now, this is where I think it's going to get more interesting. So this is now the European standards that I'm going to speak of. They had kind of started to some extent. As you can see, 5th January, it came into force, and the CSRD, in fact, replaces something that they had started on earlier, which was non-financial reporting directive, and it's now widened the scope. There's an institute called EFRAG, which has developed this European sustainability reporting standards. And these will, the member states in EU will have 18 months to translate this into rules. So January, 18 months, we're looking at sometime in 2024, when this will all become legislation, and therefore it will take effect. And you can see that they're doing this by stages. But over on the right, you can see that from an assurance perspective, it's quite interesting as well. So there's a mandatory limited assurance, and they are already placing a marker that is going to go towards reasonable assurance. What's reasonable assurance? I'm sure you already know, is an audit, right? So, member states may allow either the statutory auditor or another firm, audit firm, to provide sustainability assurance service. The member states may also allow independent assurance service providers to do the same. But if they do that, as you know, we need to ensure the quality. So they've got to have training, they've got to have examinations, they've got to have expertise, the whole lot, quality assurance, professional ethics. Now, if you haven't been working, you might be wondering, what does all this mean? But the moment you start to get into practice, into accounting firms, etc., you will understand that firms, professional practice firms, spend a lot of time and money and people into these areas, because that's what ensures quality. That's the risk management of the firm. And that helps them in the event of litigation, etc., to defend that they did their utmost to do the right thing. Okay, so I just thought I would share with you how quickly ESRS has come up. So ISSB has had 2 standards, 1 and 2, and ESRS has just come up with 12 on the go like that. And I'll share with you some perspectives. But anyway, these 12 cover the general ones, as well as a whole 5 standards on the environment, or 4 standards on social. And the stuff that Catherine was talking about will come under the social, because things like living wage, things like modern slavery, they will be disclosure requirements in the European standards. Now, in Sri Lanka, you may not have to disclose on this basis of the European standards unless you're part of a European company's supply chain, a European MNC, for example, and you meet all of the scoping and the size criteria. But there's also another possibility that ESRS and ISSB will harmonize. That is, in fact, the plan. So as they harmonize, some of their standards will become ISSB standards. Now, the current sort of difference between the two is those on the ISSB side are saying there's not enough, we need to move faster, the investors are demanding this. The European side, with all of these 12 standards, they are complaining that it's too much, it's too complex, we don't have the systems in place, it's too fast. Somewhere in between, I think these things will merge. So watch this space over this coming decade. I'm sure there will be a lot of developments in this space. Now, let me just quickly touch on sustainability assurance, because this is some findings from IFAC, the International Federation of Accountants. And you can see quite a number of companies report some ESG information, but they don't always get assurance on it. In fact, that number has been growing, but only 64% obtain some level of assurance. Most of that, as you can see on the right-hand side, the 80% was limited. But what's very interesting to me is that who was providing these assurance. Of the two categories of firms that applied ISAE, which is the International Standard on Insurance Engagements, it's 95%. But for the other service providers, they don't often use that standard. And that draws into question what is the level of comparability, what is the level of quality of these firms in the provision of assurance. And that is a very important consideration. This just gives you a little bit of a country analysis where you can see some surprising results, because places like in the US, you see quite a big amount of them are other service providers. In Australia, it's quite the reverse. In Asia Pacific, it's fairly mixed. And in time to come, we will know how this changes. So again, watch this space. But it's very interesting for me, as someone who's been in the profession, how quickly other service providers have come in, how they're already owning the space, and you can expect some changes, in different parts of the world on this, right? So the domination of accounting firms in financial reporting may not apply in sustainability reporting, but that may be too early for me to tell. We will have to watch this over time. Okay, I should also tell you that there's a new sustainability assurance standard coming out. In fact, right now the discussions are ongoing at the standards board that issues these assurance standards. It's called IAASB, International Assurance and Auditing Standards Board, and they're looking at this very standard. It will be different from ISAE 3000, but it will still be principle-based and will address both the limited and reasonable assurance. But they're getting very practical with this, because you're going to work on 6 areas, which is what's the difference in the work effort between limited and reasonable assurance. What's the different criteria of reporting that will make a difference between the two? How do you scope it? What's the evidence that you need to gather? How do you evaluate the evidence? Systems of internal control, and finally, materiality. And this, ladies and gentlemen, is going to be a very huge issue for this remaining decade and beyond, because as you can see from my little column on the right, if you look at PwC's global survey that they did last year, most of the investors believe that the company is reporting information that contains greenwashing. And if you haven't heard it already, let me be very clear that greenwashing is considered fraudulent financial reporting. So understand that, and therefore there is a risk attached to it. Okay, I recognize that I think I'm just about good in time, but before I go, there were a few things that I just wanted to share with you so that you have some access to materials that you need to look at over time. These are some of the professional insights work that we do on sustainability. As you can see, things on assurance. For the public sector, we also cover that in terms of green budgeting. That paper that I talked about in terms of companies' readiness to adopt IFRS S2, that's also there. I've given you a QR code for those of you who want to. You can scan it and find your way to these research pieces. Yeah. And then also, if you are into the SME space, there are a number of sort of toolkits that we have developed around sustainability that you might find helpful. Particularly around the supply chain, as well as how do you sort of build the environmental management systems that you need to address this whole space. And then finally, there are some learning resources that we have, because we realize that there's a huge demand here and a vacuum, if I may say, in terms of learning that people like us need. I include myself in that category, because it is going to be continuous learning from now, in fact, from the last few years, and it's going to continue. There is not going to be a stop on this, ladies and gentlemen, because we are reaching climate emergency stage. We should stop calling it climate change, because it's a climate emergency, and we as finance professionals need to get this right. Not only do we need to get the parts right about what Dr. Catherine mentioned, which is the labor side, but we also have to get this fundamentally right. So a bunch of certificates, online learning. If you're interested, have a look at it, and see if that helps you. So I'm going to end here. I'm just now going to, maybe stop my screen share and take a look at any questions and chats that have come through. Okay, I don't see any questions or comments in the chat, so I'm going to turn it back to the organizers. And if I've missed any question, please let me know, but I don't see any.
Dear Mr. Sharath, your insightful presentation made a profound impact on our attendees, enhancing their knowledge on sustainability reporting global developments. Thank you very much for that impressive keynote speech. Ladies and gentlemen, as we continue our journey through today's event, we have arrived to a truly special and insightful agenda item. Let me now take you all through the valuable feedback of DOA alumni on our internship program, Internship in Accounting, who have traversed the path that our current students are embarking upon. The feedback session today holds immense significance as it allows us to gain invaluable insights from those who have successfully completed their internships and have gone on to make their mark in the accounting profession. We are honored to have our distinguished alumni here today, as their presence underscores the strong bond and enduring connection between our department and our undergraduates. Their continued engagement and willingness to share their experiences speak volumes about their dedication to the growth and success of the next generation of accountants. With great anticipation, let us now turn our attention to our esteemed alumni who will share their experiences, lessons learned, and valuable feedback on how internship in accounting led them to excel in their career.
Hello everyone, I'm Lushan Abesekara. I'm the Deputy Managing Director of Haley's Agriculture Holdings Limited, which is a fully owned subsidiary of Haley's PLC. I completed my degree in 2003 from University of Kelaniya, and I completed my internship at KPMG Sri Lanka. If someone asks to describe my internship program in just 3 words, I would say power to fly, because it gave me that opportunity, that strength to go up in the ladder in corporate world.
I'm Kulasurya, Managing Director of KPAC BPO Connect Private Limited. KPAC BPO Connect Private Limited basically into business process outsourcing services. I was graduated from the University of Kelaniya, that was in 2005. One of the prestigious department, that is Department of Accountancy. And then I'm a member of the Institute of Chartered Accountants of Sri Lanka, and also a member of the CMA, as well as fellow member of Association of Accounting Technicians. And if you talk about a bit about this internship program, if somebody wants me to tell in 3 words, I would say that it's the life-changing tool. There is none other than to explain like that. I would say that's life-changing tool.
Hello everyone, I'm Mohan Vijay Bandara. I work at Land Brewery Ceylon PLC as Senior Vice President Commercial Finance. I graduated from University of Kelaniya, Department of Accountancy in year 2013. Department of Accountancy gave us opportunity to work during our 4th year in university. We were able to get into corporate world during our university period, which helped us to know how corporates work and apply our knowledge into theory into practice. And then most importantly, by getting into the corporate world, it helped us to start our career as early as possible. My first work experience was joining Unilever as intern. So when I was in 4th year of university, I started working at Unilever as intern. There I worked at commercial finance, where actually I am now also today. That was the base for my career. So I learned how corporate work works in actual terms.
My name is Chaminda Gunasinghe. I graduated from University of Kelaniya, Department of Accountancy in 2005. At the moment, I'm Deputy General Manager, Administration, attached to Administration Department. If we talk about our internship program, which is introduced by the Department of Accountancy, University of Kelaniya, it was a great initiative, and it was courage to the student who should have experience which cater to their academic and professional career developments. The motivation of the interner to gain his knowledge which acquired from the academic side, which could be brushed, rather enhance their capabilities and capacities throughout this internship program.
Building a multi-story building, we need a good foundation. If not, building may collapse. This internship program also like building a multi-story building. If you lay down a good foundation, definitely you can have a good professional life and also personal life.
You know, in Sri Lankan context, we study in the schools for 13 years and then we come to university and we study another 4 years there. So almost like till we become 21, 22, we are studying with mostly on theoretical aspects. We have never got an opportunity to work in a mercantile sector or to just go and touch how it's working out. So that was really a kind of a lack in this education system. But fortunately, the Department of Accountancy, we were given fabulous opportunity while we were studying, while we were getting our theoretical aspects. Just you all go and have a look what's happening across the mercantile sector or the public sector. That was amazing opportunity for us. You may know that before 2004, the non-governmental sector was not that much familiar among the Sri Lankans. But after the tsunami incident, a lot of international organizations came into Sri Lanka to work or to build infrastructure facilities to make sure the food security and health measures, and started to work. Fortunately, with this internships program, I had the opportunity to work a couple of months in a project across the country, like starting from Jaffna, then Trincomalee, coming down to Batticaloa, Ampara, Kalmune, further to Hambantota, then Gol, Matara, and to Colombo. So what I wanted to emphasize is that that experience made me so impressive because I had the cross-cultural behaviors to observe. Since I was working with the international community, I had the opportunity to work with basically some of the European people. So I had the opportunity to work with them. So likewise, that was amazing opportunity to understand the cultural behaviors and the changes. So I should really thank to the university giving me such a wonderful opportunity. This program wasn't there, I would have not been taken such a wonderful opportunity. Coordination was made by the university was so fantastic. From the point we started this program, internship program, they properly followed up us. They properly reviewed us. Time to time, we wanted to have kind of reviewing processes, and at the end, there was assessment. So I should thank, of course, that time it was really hard task for us because all the time they were coming behind and a lot of things to be done. It was a rigorous process. But today we feel that the effort that they took that time was fabulous for us. If it was not there, probably we are not there today.
During that time, I was given a project to work. There was a supervisor who helped me to deliver my deliverables. But there I was able to apply whatever I learned. So, for example, there was balance scorecard, investment appraisals. These things helped me to deliver my project. And actually that I presented to board. And then there was that helped me to get into a permanent role at Unilever when I was learning at university. During my internship period, I was able to work with many teams, sales to marketing to finance, and then work together as a team to deliver whatever I was given. And that helped me to develop my soft skills like presentations, negotiation. So these were main things I gained during my internship program.
The soft skill is one of the most important thing in my career. Only looking at theoretical part of any academic or professional qualification is not enough at this stage of career. You know why? When you work in a professional organization or academic in a corporate world, you definitely need a soft skill. Otherwise, it's very difficult you to work in a corporate world because the managing employees, managing your fears, managing your subordinates, then managing external or internal customers is very challenging thing.
So as I mentioned earlier, I joined into commercial finance at Unilever. Then I moved to different pillars at Unilever. That helped me to learn how each finance pillar works. Today I'm working as Senior Vice President Commercial Finance at Land Brewery. The knowledge that I gained at Unilever as intern during my internship program helped me to become who I am today.
So this opportunity was given by the university was amazing because in a theoretical aspects coupled or the merge or the bridged with the private sector or the public sector requirements. So that was an amazing opportunity. Of course, we should everyone thank to the university giving such a wonderful, amazing opportunities to these students to get fit with the requirements of the industry requirement. Please improve your sensing abilities. You should be able to sense. To do that, what you all should do is that try to collect as much as information from the ground, maybe economically, maybe politically, maybe geopolitically or international trades. Try to capture as much as possible information and then try to build up the network. That is really important. During our internship, we were having enormous opportunities to join and build our network and to improve our fashions. So please make use this opportunity, try to develop your sensing abilities and try and get ready to be responsible people in this country.
As a piece of advice that I am giving to all colleagues there, so you basically need to develop your basic skills. Learn how to do Excels, learn how to apply your theory into practice. And then finally, most importantly, learn how to work with people and develop your soft skills. Like let's say presentation to negotiations to how to talk to people. So everything comes in handy when you work in corporate world. So that's my advice to you all.
My final advice to my current and ongoing interns is get the support from your supervisors from the Department of Accountancy and clarify all your areas to be covered in your internship program with the partners or corporate companies and get your internship program done.
If I advise the new interns on this internship program, university is giving this opportunity to you guys to get the corporate world experience. Please take that advantage because take this as a challenge. And also take this as a strategic window for your future. If you take this challenge right and correct way, you can flourish in future. Because when you study hard, when you learn hard, and also when you train hard, no one can let you down. So please get this opportunity correctly and don't discourage at any point, because I know this training is very hard period because you don't get paid well. Because of that, sometimes you want to give up. Don't give up, because if you give up, you won't get good future. If you work hard and get the challenge and succeed, your future will flourish and you can have a good professional and personal life.
With that feedback from our very own alumni on internship in accounting, it's time to conclude this enlightening event. Hence, it's with a sense of gratitude and pride that we reflect upon the knowledge shared, the experiences gained, and the connections forged throughout the day. The insights shared by our distinguished speakers, industry partners, alumni, and undergraduates have provided us with a deeper understanding of the accounting profession, its evolving landscape, and the critical importance of practical experience in shaping successful accountants of tomorrow. Before signing off, we would like to take a moment to express our heartfelt appreciation to everyone who has contributed to the success of this event. We extend our gratitude to all our distinguished guests, keynote speakers, industry partners, and esteemed alumni for generously sharing their time, expertise, and invaluable insights with us. A special word of thanks goes to our Head of Department, Dean, Faculty of Commerce and Management Studies, Vice Chancellor of University of Kelaniya, and to our academic members who worked tirelessly behind the scenes to ensure that this event was a resounding success. Your dedication, passion, and attention to detail have truly made a difference, and we are immensely grateful for your efforts. Next, dear students, as you all are the future accountants and leaders, we commend you for your commitment to learning, your eagerness to explore new horizons, and your unwavering dedication to your chosen field. We hope that today's event has inspired you, broadened your perspectives, and provided you with the motivation to pursue excellence in your academic and professional endeavors. As it brings this event to a close, it's now time to salute to the national anthem. Thank you, ladies and gentlemen, for being a part of this remarkable event. May the knowledge gained, the connections made, and the inspiration received today propel you towards a brighter and more sustainable future. Until we meet again, let us continue to strive for excellence in all our endeavors. Thank you and have a wonderful evening.